Hi all, I'm Santosh and welcome to the tutorial session of Commerce Guruji. In a business, daily a lot of transactions takes place and it is important for a business to track all the transactions. Here, journal entry comes into picture, but journal won't help the owner to know the cash balance, bank balance, credit balance, total sales, total purchases, etc. In this scenario, ledger entry plays a major role. In this video, I'll be explaining you all what is ledger is all about, why it is necessary, what are the subdivision of ledger, and what are the points to be remembered while preparing the ledger account. Let's start. Basically, ledger is a summary of journal entries. Generally, transactions are classified, that is, transactions of same nature are recorded together. In the ledger, final entries of all the financial transactions are recorded. So, it is known as Book of Final Entry. And we should know that why ledger is necessary. Because to know the actual position or balance of account, ledger helps to know the cumulative, that is, the net effect of transactions of the same nature. The main objective here is to provide the permanent record of all the transactions to indicate the cumulative effect relating to a person, assets, expenses or income, etc. It helps in preparation of trial balance. There is something called as subdivision of ledger. In the case of small business having few ledger accounts, it is possible to keep all the ledger accounts in single ledger. But for a business concern where there are too many ledger accounts, it is inconvenient or impossible to maintain the single ledger. Here, subdivision of ledger comes into picture. The single ledger is subdivided into 3 or more ledgers as per the requirement of a business. The 3 main ledgers would be debtors ledger. This is the ledger is also known as customer ledger, sold ledger or sales ledger. Debtors ledger contains personal account of all the trade debtors, that is, to whom the goods are sold on credit. The point to be noted here is that the personal account of all the other debtors, that is, debtor for assets sold, money lent or services rendered, are maintained in general ledger. The second division of ledger is creditors ledger. This is also known as suppliers or purchasers or bought ledger. This account contains all the accounts of trade creditors, that is, from whom the goods are bought on credit. The personal accounts of all the creditors, that is, creditor for assets purchased, money borrowed and services received, are found in the general ledger. And the third division of ledger is impersonal ledger. This is also known as general ledger or principal ledger or nominal ledger. This ledger includes all the other accounts, that is, the accounts other than the personal account of the trade debtors and trade creditors. It contains other personal accounts, that is, assets account and nominal account. To go a step ahead and talk about the format of ledger account, usually each ledger account has the shape of English alphabet T, and for this reason being, the ledger accounts are called as T-form account, where there would be 2 parts, debit side and the credit side. Both sides are having same columns named date, particulars, journal folio and amount. While preparing the ledger account, it is important to remember a few points. First of all, separate accounts should be opened for each account found in journal. For all the transactions relating to any particular account, only one account should be maintained. The name of the account should be in the bold letters on the top and in the center of each account. The word DR is an abbreviation of debit and CR is the abbreviation of credit. It should be written at the top corner of each account to indicate the debit side and the credit side of the account. Posting to ledger should be in the order of their dates. Every entry made on the debit side of an account should begin with the word to in particular column to indicate the amount is owned by the other account to the particular account. In this context, the word to and by need not to be used again and again. Instead, the sign ditto could be used against other entries. While posting opening entry, the opening value of each asset should be entered on the debit side of the each account, and we should not write to capital account. We should merely write to balance brought down. In the capital account also, we should not write by assets account on the credit side to liabilities account on the debit side. We should merely write by balance brought down on the credit side. And the last point is balancing and closing of the ledger accounts. For striking or balancing, we are looking at either a particular account has received more benefit than it has given it, or given more benefit than it has received. It is an act of finding the difference between two sides of a ledger account. That's all in this video. Hope you found it informative. See you all in the next video of Commerce Guruji.
Commerce Guruji, the best platform towards knowledge. Like, share, and subscribe. Commerce Guruji, towards knowledge.